everyone, welcome to Just Invest Today. And in today's video, we are talking about this hedge fund actually closing down. Liow. Remember, he's a respected investor. I think he just kind of like made his mark in the investment community. He's been doing a lot of interviews, a lot of podcasts talking about his investment strategy. I kind of respected him. He had a pretty solid portfolio, but he is closing down his fund. And I kind of have my reasons why he probably is doing this. This is just speculation, but he kind of talks about it in this kind of interview or this kind of post. But who knows for sure why he did it? Because man, this market is going to hell. Everyone's getting killed during the stock market crash/correction. So Liow closes down his fund. He's down double digits in this year, man, because we know the market has been getting killed. A lot of his big portfolio or his big holdings are kind of down like 50-40%, and he's very concentrated. I think he has like 10 positions. How many positions does he have? Yeah, he has 10 stocks. So he runs a concentrated portfolio. And remember, he's in the institution. He's like one of those hedge fund managers. Remember, you have the institutional imperative. It's so hard to focus on your returns and focus on your strategy, right? When people are knocking on your door telling you, you need to perform for us. If you don't perform for us in 1 or 2 years, we don't want you. You're not going to get us to where we want to go. So they're going to try to take their money out. But even in the article, it said people weren't taking their money out. But man, in the back of your mind, you want to make these huge returns for your shareholders. And if you're not able to do that, you have that narrative of just like, damn, I don't know if I can do this. So that's why it's super key just to like honestly do this on your own. Don't worry about getting some fun unless you really want to do that. Because in my opinion, you don't have to worry about anything else or all the noise, man. You can just get your money, invest in the stock market, wait 5 years, 6 years to get huge returns, man. Because patience is what gets your money. That's the way you win in this market, is getting your money. We don't have some kind of informational edge. We don't have some market edge. We don't have some like crazy mathematical discounted cash flow edge. That is not our primary source of how we're going to win in this market. As young shareholders, as people just starting out, as people just getting into this industry, we don't have any of those advantages. Our advantages in the market is basically being patient, honestly. Being very patient and buying with a margin of safety. That's our only advantage. Because people right now, the hedge funds, they get rid of their shares every like 51 days because they have to show performance. We don't have to show performance. So we're able to hold stocks for 5-6 years without having to show performance. So we might be down 20% 1 year, maybe down 10% 1 year, and we're not bothered. Who cares, right? Because then the next 3-4 years, what if we're up 30%, 40%, 50%? And that's what happened with a lot of investors like Nick Sleep, like freaking Seth Klarman, like Joel Greenblatt. A lot of people had to go through these struggles, but you can't do that. It's hard to do that when you have people hounding on you, talking about you, kind of getting at you. Because look at this, PayPal, past 6 months, down 65%. Who in his fund is going to want to stay with that? Down 65%. It's going to be hard because these people are not real investors. They don't know how the market runs or how it acts. Our only edge is having patience and looking out long term, because remember, hedge funds switch their shares every 51 days. If we are realistic about our goals, because we don't know where the market's going to be in 1 to 2 years, holding for 3 to 4 years will show the true returns of a company. So that's our advantage. Holding. Similar. Down 60%. Like, that's crazy, man. 60% in just 6 months. So this is what he has to deal with. Gitlab. I don't even know. There's no chart. 51% in the past month, man. So can you imagine that? And you having going back to your investors? When we launched in 2014, I made a promise to return capital if I ever lost conviction in our ability to deliver superior absolute returns sustainably. I believe our flagship long and short equity strategy has reached that point. So he's kind of done, man, at this point. He says that he doesn't know if he can hit his marks, hit his goals with his hedge fund. And People, and the thing is, people were not taking out their money out of the fund. People still kind of believed in him, but he doesn't really believe in himself that he can have these crazy performance results, man. So that's where it comes with the territory of it being a hedge fund manager. You have to impress other people because you have that imperative, that institutional imperative of performing for your shareholders, or you have that in your back of your mind that they're going to take out their money. They're not going to be with you for the long term. And it's hard to deal with that when you have stocks down 60%, 70% for just a month. That's all. And who knows when that's gonna kind of revert back to its means. So that's why it's so important just to have your own investment strategy that you can stick with through the ups and downs, because you can go 2 years without having any gains, or 3 years without having any gains. But if you have a sound strategy, maybe in the 5th year, 6th year, 7th year, you just have crazy gains that you just recover all of that. But who's gonna stick with you for those 3 years of you just underperforming the market? It's gonna be hard for people to stick with you, even though you tell them your strategy. So that's why this investment game is hard. But if you stick to the simple strategies of investing, just understanding a business, buying with a margin of safety, making sure your company has an incredible moat and you have good management, you will do fine over the long term. Peter Lynch said his best investments took 6 to 7 years to come to its peak, basically. So that just goes to show you the investment game can take years, and some people don't have years. It's hard because no one's patient anymore. No one has that 5-year time horizon out into the future. People don't hold stocks like that anymore in this market. So guys, please like this video, share it, subscribe to my channel, and I'll get back to you in the next video. Peace.